I bet you have been missing out on the markets because of this. If you're a beginner trader, semi-advanced trader, or advanced trader, you do not know about this, or you have not given time to really study candles, to go deeper inside candles, to have a bird's eye view of candlestick patterns. And because of this, you have been missing out on the markets, placing bad trades. In this video, I'm going to share this amazing tool to add on your arsenal. My name is BGFAX Legend, and welcome to my YouTube channel. So sit back, look for that coffee, look for that juice, and enjoy. Let's go. Alright, so I know you're probably wondering, what am I going to learn today? It's really a beautiful topic, and we have seen a lot of traders from our community also benefiting from simply understanding the basics in the markets. Like I promised, guys, that I'm going to be helping you with fundamentals, the correct fundamentals in the markets, just to get your foot in the markets, right? So without further ado, today we are going to talk about candlestick math addition. I know most of you guys hated mathematics, some of you loved mathematics, but we are not going to do the usual math that a lot of people are not interested to hear about, right? So this is candlestick addition or absorption or math, right? So what we are simply doing is that we are trying to study inside a candle so that we can have a good reason whether we should buy, we should sell, or stay out of the market or stay off the market, right? So with candlestick math, we are able to see the magnitude of the battle between buyers and sellers. With candlestick math, we can be able to see the magnitude of the battle between buyers and sellers. I always like to use the analogy of a tug of war game. I'm sure most of you guys know the game whereby we have two teams that are pulling against each other, right? So just try to visualize this and put it into candlestick perspective. We can be able to see the magnitude of the battle between the buyers and the sellers in the markets using candlestick addition. We can also be able to see who is in control and who is losing the battle, and also who has the biggest chance of making it, right? So obviously where there's a battle, there's gonna be a winner, there's gonna be a loser. We can also compare the body of the candle against the wick, and this is what we call the body to wick ratio. I know most of you are familiar with this. If you are a beginner, just by looking at the overall structure of a candle, the size of the wicks and the size of the body, we can actually end up having what we call a body to wick ratio. And also a long body signifies strength in a candle. A long bodied candle signifies strength in the candle. It signifies strength in the direction of that particular candle. A long candle in most cases signifies momentum, to show that there is momentum in that particular candle, right? The body of a candle signifies also the magnitude of the distance covered, right, within that particular period, right? The distance in terms of price, right? Wicks show price rejection and the magnitude of rejection per given time, right? So when you're looking at the candle wicks or the tails, you can also be able to see the rejection or magnitude of that wick, right? And also tails also show volatility of price per given time. And also long rejections in the market often happen on key reversal or key turning points in the markets. So as you are trading, as you are analyzing, you want to see these rejections at key turning or reversal points, right, according to your strategy that you're using. By putting things together, you will be able to see that we can compare wicks against bodies. That is the body to wick ratio, like I said before, right? It is either the body is larger than the wicks, or the wicks are larger than the bodies. So this is how we can then now be able to interpret that particular candle. So I'm sure you still remember that if we have a bullish candle, the opening price is gonna be here, it's gonna be here, and then the closing price is gonna be here, and then the high, the lows, right? Same applies to the bearish candle. The open is here, the low, the close is here, and then the high are here. Just looking at these two candles, we can establish that this was a bullish candle and there was so much momentum in the direction of the buyers. Why? Because if I look at the length of the body and the length of the wicks, of the shadows, I can actually see that the body is bigger or is greater or is larger than the wicks or tails. If I look again on this particular candle, I can see that this wick or tail region is larger than the body region. So by looking at this, I can simply establish that the body to wick ratio is such that the wicks are larger than the body. So in other words, this is a fully rejection candle, and this is a fully or full momentum candle, right, with slight or small rejections. So let's go to the next point. Shadow size. A long shadow to the upside in most cases represents rejection of price to the upside. This is usually a selling signal, and we should expect price to sell. There is a reason why I said this is usually, right, not all the time, okay, but most of the time. Should we say 60% and above, depending on where you are looking at that particular point. If you look at these rejections at a very high probability reversal points, there is also a high chance that price is going to reject and reverse. A long shadow to the downside in most cases represent rejection of price to the downside. This is usually a buying signal, and we should expect price to buy. And also, as I said earlier, you need to see this at a high value area. Now, as a trader, we want to see this behavior of price on significant price points. Remember our study of exhaustion and strength curve, right on this side. We were looking at a candle, and we know that a bearish candle, obviously the opening price is here, the closing price is here, right? And the lows, this is the low, this is the high of the candle. Now, we know that in this cave of the weak rejection or the tail, buyers were strong at one point until this particular point where we had buyers exhaustion. In other words, sellers took over and pushed price down, right? And then we see that at this particular point again, sellers lost their position. They were in a tug of war with buyers. They lost their position and the buyers took over. Now, when we look at this candle and looking at this curve, we can see that the curve of the bottom side is greater than the curve of the top wick side. So what does it mean? What it simply means is that we have a long shadow or long tail to the downside, right, sitting on what we call an imaginary, like in this case I had to use an imaginary price point or reversal point where we are expecting reversal. And this bearish candle, we ended up seeing a massive rejection. Notice that I'm not really giving this candle a name, but I'm just studying its nature, just looking inside the candle, studying the parameters of the candle, and then interpreting the candle. The naming candles, it actually helps you, yes, in a way to remember certain patterns, but if you don't understand the context, if you don't understand what I'm showing you right now, 99% of the time you will be confused. So rather study this, understand this, and then you take it into the markets. You see how beautiful studying price action begin. If you like this content, guys, if you really love the way I'm teaching and sharing this, be sure to like, share and subscribe, and make sure you click the notification bell so that we help the channel grow, we help others learn these fundamentals in the markets. And be sure to share to your friends in groups everywhere you can. And you can also watch the first video we did on candles and the second one. Be sure to watch. And if you have just watched this video and you have not yet watched the first one, I would suggest that you start from the first candlestick video and then you come back to this video. It will help you to understand what I'm saying. So let's go to the next point. All right, so candle absorption addition technique. Like I said, this is not your usual method. Oh, I know somebody was like, oh, so mathematics is back again. No, this is just like a technique too, so that you can remember, right? So this is a technique of blending at least two candles. We are blending them, right? At least two candles to form a single candle so that we can be able to interpret it. We do this to get a bird's eye view of what is happening in the markets without having to cram candlestick patterns. So if you are that guru of cramming, I'm sorry, there's nothing to cram here unless or otherwise you still want to cram. We do this so that we can have a bird's eye view, see exactly like a three-dimensional view of the market without really going back and forth in time frames. We are also able to use this technique with multi time frame analysis, top down or down to top analysis. So by doing this, we can see what is happening on the next time frame without having to go to that particular time frame. We are also able to eliminate noise and confusion in the markets. When blending candles, the candle bodies absorb each other, forming a single candle, which we will interpret and be able to either look for a buy or sell, or study the market direction, or just see what is happening in the markets. Now, like I always say, guys, you need to study. Always know that price action is much more stronger on higher time frames, from at least the H4 time frame, the D1, the weekly up to the monthly, right? Lower time frames, yes, you see candles, but obviously they are going to be not as stronger as the bigger time frames. So now we need to go to the actual charts. We need to know exactly how we can actually do this absorption technique. Now, when you're looking at this chart, right? When you're looking at this chart, this section here, okay? Notice that we have this bearish candle with long shadows. Obviously, it's a rejection candle. And then we are seeing this bullish candle with small to no shadows at all, right? And when we see this as a pair, many people like to call this a bullish engulfing. Don't worry, if you don't understand this, I'll do a video where I will teach you candlestick patterns, right? If you want me to do that, tell me in the comments below if you really want me to do, right? So this is a bullish engulfing pattern, right? This is a common candlestick reversal pattern. Now, why is this candle so beautiful and why is it of high probability? It is simply because of what I'm about to show you now. Looking at this bearish candle and this engulfing candle. So this is how you do the technique of absorbing candle. What you do is you take your two candles, 1 and 2, right? And you put them together like this. So the bodies are going to absorb each other and form a tail. So whenever the bodies absorb each other, they are going to form a tail, right? So a body, this section where we have a body and a body, it is equal to a tail, right? So if we add this body 1 and the body 2, will form this tail, okay? Now the remaining part where we have a body and a tail will form a tail. So always remember this, a body plus a body is equivalent to a tail. So let me put it right here, okay? So if you try to remember this, obviously there are times where we are going to have like intricate price movements, but basically this is as simple as it can be. So by absorbing these two candles, we will end up having this particular candle. So this section will remain as a body, right? And then these bodies will absorb each other together with the tails. Remember we said tail plus tail is equal to tail is equivalent to tail, and then body plus body is equivalent to tail, and then body plus tail is equivalent to body, and then tail plus tail equivalent to tail. Now we are left with a candle with a massive rejection. Now this is where we now interpret this particular candle, right? This is where we now interpret this particular. What do we do now? Remember, I told you guys that long tails or shadows, they represent rejection or volatility in the markets. And now we have a shorter tail or rejection on the top side, and then a longer rejection on the bottom side, and a very small body. So the body to wick ratio is such that the shadows or tails are larger or greater than the body, and then the upper shadow is smaller. So by looking at this, we can establish that this is a rejection candle to the downside, and we expect that price will move to the upside. Let me repeat that again. By looking at this, we can actually say that this is a rejection candle to the downside, and it's a bullish candle which closed right here, and by so doing we expect that the market is gonna push to the market. We expect, okay? Always remember the language of traders. we do not have guarantees in the market. Okay, we work with probabilities. That is why I'm saying we expect. Okay, so obviously with your other confluences, so these are basically fundamentals in the markets that you need as a trader. You will see your price action analysis or the chart's interpretation, you develop into an amazing trader. So now it's time for us to go to the charts and we do a couple of examples. All right, looking at this particular candle in this box, this is a bullish engulfing candle. We have a bearish candle here, we have a bearish candle here, and then a bullish, almost similar to the previous candle. All right, by looking at this candle, so if you want to add, right, you're going to connect the body, the top of this candle together with this candle right on the body, and then we are connecting this, and then we also want to connect this one as well, and then we connect the high of that particular candle. We also connect this one as well, right? So remember our mathematics. Body plus body is equivalent to wick, right? So which means that this section is a wick. Okay, body plus body is equivalent to a wick. Now wick plus wick is equivalent to wick, so this region is also a wick. And then wick plus body is equivalent to a body, so this region will remain a body up to this section. Body plus wick is equivalent to a body, and then this region is just a wick by itself, so it just remains a wick. Now what we will end up having is a bullish, we end up having a what? A bullish candle, right? We end up having a bullish candle. Now to interpret this candle, we can see that there is massive rejection right on this side, right? Rejection. Okay, rejection. We have massive rejection right on this part. Okay, so the body to wick ratio is such that the wick is greater than the body, and then we have seen a massive rejection to the downside. So what is the interpretation? We expect that the market is going to push to the upside. As simple as that. So let's do another example. All right, so I'm gonna use this example of all these candles here that we see here, right here, all these candles that we see here. So we are gonna do that example, so we can see that we have a lot of candles here, right? So right from this point, so again, what you want to do is you want to mark the high of that range, the high, and then you want to mark the low of that range. Now the bodies are here. This is where the closing of that bullish candle, and then we have the body of this particular candle, right? The closing of that, because I'm studying all these candles, 1 2 3 4 5 6 7. Now how are we going to absorb these things, right? And also I need to mark the body of this particular one, right, so that I can do my math well. Okay, so remember the mathematics, right? So wick plus wick in this region is equivalent to a wick. Okay, and then we have a body. All this is going to be absorbed and form a wick. Okay, so this region is a wick. Remember, body plus body is equivalent to a wick. Now this region, wick plus this body, we are gonna have what? We are gonna have a body. Body plus wick is equivalent to a body. We are gonna have a body. Remember, we're gonna have a body. So because this is the last candle that remained on the right side, it's gonna be this bearish candle, right? And then this last region, we are gonna have a wick and a body. Okay, so we are gonna have something like this. So now to interpret this, if I delete this line so that you guys can see clearly, we can say that in this region, all this price action that happened, we ended up having what? We ended up having a candle that has got a larger wick, and it's showing us that there is massive rejection to the upside, and we have a smaller body when we actually study the body to wick ratio. Therefore the sellers won. Now when we then look at this candle, remember the candle study that we first did on the first video. If you haven't watched, you need to go watch the first 2 videos. Now when we look at these particular candles or the bodies, we can now establish that we are expecting a lot of selling to the downside, and we can also see that this is a massive bearish candle, right? When we look at the curve as well, if we are to study the curve, we'll see that the buyers pumped price all the way up, right? They pumped price all the way up. And when they pumped price all the way up, this is where we see buyers exhaustion, right? We see exhaustion. We see buyers exhaustion right here. And then sellers took over. Remember the tug of war, sellers took over and price started pushing to the downside. And we ended up having a candle like this. So this is a massive bearish candle. So guys, as I promised, I'm gonna be doing a series of these videos. If you really love this kind of content, please make sure you like, share, and subscribe, and tell your friends, tell your neighbor to tell your neighbor. Share this in trading groups, trading communities. Tell them that there is a channel called BGFAX Legend. Let them come and watch. It's gonna be fun, guys. I haven't started. This is just the beginning. So you can also follow me on my Instagram page and all other social media platforms. If you feel like you love my teaching style and you like to join our community, we also have a community and a full mentorship program that we teach advanced stuff that I don't share on YouTube. So this is just fundamentals for beginners, just to get a foot in the markets. So guys, I don't want to make this video long. God bless and thank you, and a peace.